This week I made I did make a boo-boo. I overworked myself in the sense of coming up with the weekly thought. I thought it would be interesting as for most of you who've been following the weekly thoughts and then the trading room, and then we do have followed up with Twitter, a lot of our trades and ideas, and then we started to back off putting out the trades in Twitter, just more or less just coming in with the ideas and then the offsets. One of the main reasons is it was confusing people, and a lot of people didn't understand it, and I guess if you don't understand it, it doesn't make sense. So, but one thing that does make sense is if we go through, and again, this is the unabridged version for the trading room, just to put it out fast and furious. The corrected, grammatically, professionally gone through version will be sent out in the email sometime this morning. But in the general, usual spirit of things, I like to put this out and then go through this in Monday morning's planning and scanning. So now that I've gotten that disclosure out of the way of why this was such a long version, it can be found under your documents, and for visitors you can download your own copy there. It is in Word document, and I'd like to say good morning to all our resident members, and especially Jeff and Bill, and we have visitors from out of town here in office like Eduardo and Jimmy, and I want to say, who else do we got? Harvey, I understand you were a consummate gentleman as always and an incredible host once again, so of Jeffrey, so that's nice to hear. As always, I told him you are, we just had this little conversation off the record of, it always seems I surround myself with really wonderful people in my life. So with that said, Andy Wyatt and a lot of our students and Lauren McCrazy, or shall I say Lauren McRae, served our country in multiple tours in Afghanistan. He's in our room and is doing what seems to be very good. And we're very proud of Lauren to be here with us as well. And so I just like to give kudos, because we all are doing things, and the whole purpose of Person's Planet is to see us, empower us with better trades and to enrich our lives. I mean, that's really what it is. The style of trading that I've put out and the teaching that I've done, if it's convoluted and if it's ambiguous and it can't be replicated, then it's, if it can't be taught and regurgitated by others, then it's not really something that's well worth following. But I think we've got a methodology that has been working, and logic really does apply in all of our trading concepts. So with that said, in the spirit of that, I took the time this weekend, actually yesterday, to go through the weekly thoughts and observations, but also not just the weekly thoughts and observations for last week, but I wanted to go through the last couple weeks of what we talked about and go through the results. And one of the things we did back, as you can read here, on April 10th, I tweeted out to take well, let me go back, from the week issue April 6th. So for those that are just visiting, what am I talking about? Well, we've put this out as a weekly thoughts, and then we sent it by email and post it on our blog. And so basically April 6th, and some of you guys have been here before, and we've been bullish in the market pretty much mostly all year. But we actually came out with a short and sweet one on this week, which stated, here's a trade for the week. Buy the May 211 calls. My prognostication is that we are going to see a move of 5% by the May option expiration. Today, what I wanted to follow up with is we did tweet out to take a third of the profit on that May, the 211 expiration calls, and on a third of the position. And these expired, or closed out, not expired, poor choice of words there for option traders, at a bid of 257. Actually, they're going to be higher today. So I am still bullish, and you can read in here, and I've got a couple things that I want to go through. As of Friday, the S&Ps, or the spiders, were at 211.65, and that puts us at a 3.43% year-to-date gain. I'm calling for a 5% by May option expiration. Well, we're damn close. But if we do get that 5% move, by the way, a 5% year-to-date gain that I've been looking for, puts us did I even say it? We need 214.87 to be exact in order to have that 5% year-to-date gain. So we need another 3 spider points to make the 5%, or about 1 point, as you can see, 57%. That's where I get that math from. My longer term, which I didn't say, which is quarterly pivot, which, by the way, the monthly pivot resistance, 214.64, 214.87, as you can see, that would be 5% almost, or there in that vicinity, 4 point something change if we hit monthly pivot resistance. But if I'm underestimating this potential move, my longer term quarterly is actually 219, and I don't think anyone's really looking for a melt up. A lot of people were looking for meltdowns and corrections, and it's been too long in the leg, and the transportations haven't moved, and every other, God, they've thrown so many things at this market, and the Federal Reserve is going to raise rates in June, and we've really seen a lot of stuff get thrown at the market. And so with that said, I'm telling people this week, get the hell out of Dodge of those May 211 because of theta. We've got 19 days to expiration. And I would say if I am looking for more bullish upside, we have the Fed, we have economic numbers, we've got earnings. We have, I mean, if there was a week of something here for everybody, energy reports, there is something here for everyone. There's, we have auctions coming up for treasury notes. I mean, there literally is something here for everyone to trade. We have Apple out today. We've got earnings galore and big earnings. It's like, man, just when you think you get through one really hard-working week, then you get through and you come through this week. And this is the week of all weeks, I would say, as a trader. So why would I tell people to get out of these options? Because with theta, they're going to, you know, if we get another couple days, if we just opened unchanged, now we're up, we get an opportunity to dump them a little bit better. But if I'm bullish, why would I say get out? Because I'm telling people to look at, to roll up, I call it up and out. Just, you're moving up and out. You know, you're going up to the east side, as the TV show was, right? What was that? The Jeffersons. Moving on up. Well, what we do in this case is that you get out of a shorter time duration, closer to the money. You've played most of the delta play at this point in time, and with 19 days to expiration, and by the time the Fed comes out, or if Apple, something happens, you know, we're going to see a 257 price go down to like 200 in a heartbeat. So what I would say, dump the rest of the 211 calls as a follow-up on the May, and look to buy the May 5th week options, okay, and look at the 214. So we're rolling up and out, meaning we're going up some strikes by 3, and we're going out in time, but not too much time. And those calls you can look at buying for about $1.50 and then we might not be able to get those. So the difference between selling these out, if you sell them at 269, if you sell them at 270, remember you're going to get like, what, 13 cents better for those options, or whatever you're getting or better, cut that back a bit. And when you roll into the May 5th, which have 33 days until expiration, it has a delta of 35, and for a directional trader, and for those that have taken my option courses, you know that that is just the sweet spot. Now, options are subjective in nature and valuation. They, now this is not an options course, this is just explaining what I've written. Options are subjected in valuation due to several factors: time, price, and of course price is dictated by demand or lack of demand. Open interest, there's only 1,900, so unless you're planning to buy 5,000 of these, you know, you're pretty safe in that realm of what I call reality. Because the market, if we do jump up and by the May option expiration, I undershot the market and it goes to 7%, or if the S&Ps go to 219, then those would be a perfect trade. You cut your risk down. And so I just wanted to explain what the hell all that means, okay? So I thought I would also take, and you can go find here if I put out free information, and that's pretty much what the Weekly Thoughts is, and we do a lot of great stuff in the room as far as stock selection, like eBay last week, and market analysis, and Mondelez, and Juniper Networks, and the list just goes on and on and on this year. But what I put out over the last 2 weeks, let me just go through and say, well, what has happened? And one of the things that I talked about in the last 2 weeks was Green Mountain Coffee Roaster. I was kind of hell-bent on that stock, but then we said, listen, it's not performing, and we need to see a little bit more work in Green Mountain Coffee Roasters. So I also said last week, you can take a look at we needed to take a look at the stocks that I'd mentioned in the prior week. So what are the results since I came out with that issue? And it's all in writing, and it's all put out on a timely basis. So I just wanted to track and see what the hell's going on for you guys. Microsoft was up 15.5% since that time we recommended it. TIFF, which is Tiffany's, is down 2.5%. Xilinx is down 2.5%. Norfolk Southern, which has earnings this week, was down, well, it's unchanged pretty much. GIFI down 8%. DNR down 5%. So as you can see, the selections did not have great performance in the last week except for Microsoft, but we also had that middle of the week options trade, which was eBay, and that stock was up 4.8%. So if you tally everything up, you're still a net negative slightly on those trades, depending on if you took them and where you got in. But I wanted to follow up, and I think that's what's important. If you take the responsibility to put something out, then follow up with it, which I don't know if our industry, if we see a lot of people that do that and take that type of accountability. So here's what I did. I said, well, let's take the accountability on that, number one, and now let's go with follow up with those particular names before coming out with new recommendations. And so you can take the time to read what I've posted here. And so I still think Tiffany can move up to 92. Xilinx, if it holds above 41.14, then I think it'll see a move back to 47 by June. So I'm giving my price and time concept, so you're not just sit there with dead equity. GIFI just looks ugly, and any long should be exited on any rally, and a rally today, tomorrow. If you get one, just a small pullback, just dump it. DNR, if it can hold above $7.64. Remember, these are cheaper stocks. But I think DNR has the potential to reach 10.5 by June. Microsoft may have overplayed its earnings, eventually fill the gap it left last week, but we might have follow-through strength, as a lot of stocks, when they have these enormous gaps up, they tend to do what? They tend to continue up because people think they can't go any higher. So we see that with Amazon. We see that with a lot of stocks that we have follow-through strength after a huge earning. Netflix is another. We did this example in our trading room last week, and I think it saved a lot of people a lot of heartache. Any event, so I want to also go by and say this week, and that's why I went into a long-winded, it's not really long-winded as much as basically going through and taking accountability and following up with what I've written in prior weeks is all it is. But last week we had it's been such a great month in our stock picks and our option trades. On Friday, I said, hey guys, if you've had a great week, what you need to do, or a great month, and you've made profits, and we polled the room, and everyone in the room said they had a really good, strong month. And what I said is, I gave a story about Jesse Livermore, and this is very important. And the importance of the weekly positive thought is to follow up and give us new trading ideas, right? And so on Friday, just as a reminder, I said, get a hold of your broker, ask for a check back for a portion of your profits. When the check comes in the mail, this is the industry, you don't get a lot of personal pats on the back. Your P&L is your pat on the back. And if it just sits in your account and you're trying to grow the account, a lot of things that happen. Remember, you're farmers, really. You're here to extract cash, and that's your crop. This is as a trader, that's what I was taught. And you need to take money out of your account. And you have to ask for that money. And if you go to a lot of different brokers, or every single brokerage firm's website, they always tell you how to send a check, how to add money to your account. You notice that? It never says, here, you really got to dig very hard and go to the search tab to find out where it says, how do I ask for money back, which is a unique experience for some people. Over here, I teach people how to take money out of the market and then take it. You have to do that. But anyway, that's the pat on the back. And when you get that check in the mail and you open that envelope up, that instantly reminds you what trading's all about, because now it's in your hand. So anyway, that's a nice little pearl of wisdom there. So in following up with that, this week we have an incredible amount of important economic reports. We have earnings. We have Federal Reserve members are speaking, and I've got times listed, not their names, because to me it's just, you know, it's not important who's really talking as much as what time they're talking, because we might see, if you put on a day trade, at least you can understand at a specific time you got a Fed member speak, he could say something to ruffle the market a bit, and you need to know that. As I say, holy cow, Batman, tighten the strings on that cape. This might be a rough ride this week, because we have all of this, including not just the amount of earnings that are coming out in economic reports, but the FOMC. What is Janet Yellen going to say? I mean, if they say we are continuing to be patient on interest rates, oh my God, this market could just, I mean, we'll accelerate, because I think there's a lot of still shorts in the market, or people that aren't in the market, which means they're short bought, which means they're in cash, they're not in stock. And that, they would chase this, and that is bullish, because it would increase the immediate demand. Anyway, Saturday's the Kentucky Derby, and by the way, Churchill Downs, the home of the Kentucky Derby, has earnings today. So I thought that would be kind of an interesting concept to look at. In this week, I did want to add some names that we could focus in on, because every single one of the names that I'm giving you, the few things that I do that's pretty nice is identify what type of trigger or signal it is. And these stocks are all weekly high close doji patterns, good volume, nice seasonality to them. And I also want everyone to know, before they just jump into a stock, to identify, guess what? The reason they probably look good, or there was a nice high close doji, the majority of these names, all, if you see this, have earnings this week. TEG, which is a utility stock, there has earnings on the 5th. Semiconductor did not do well last week. The SMH was the only, as I posted here, the SMH was down about 0.3%. It was one of the sectors that did not do well last week. And I think this semiconductor name, Micron MU, has a very good chart pattern. Anyway, technical points of interest, just key points. All of the indexes are in still weekly buy mode now. The weekly OBV and breadth indicators did post gains in every index last week. The AD comp levels posted another new yearly high in the NYSE last week. Now, a lot of people focus in on the NYSE, and I like to teach people why it's not just the single only AD comp line that I look at, because it's not a pure U.S. stock-based index. But anyway, it did make a new high for the year on a week-to-week calculation. One of the other tools that we go through every week is the McClellan Oscillator, which is based off of the NYSE, and it's still followed by most institutions and traders, so we want to follow it as well. I gave a cycle analysis from peak to trough on a weekly basis. I've done that many weeks in a row. Believe it or not, the weekly McClellan Oscillator is still at -95. It hasn't even gotten to the zero line. It hasn't gone positive. The daily level is only at 32, suggesting that the market is not overbought. Can you believe that? Here we are in the indexes at new highs, and there's a lot of stocks and a lot of stocks and sectors that are undervalued according to their, say, 50-day moving average. And I'll get to that in just a second. There were 5 names in the XLU top 10. Half of the top 10 stocks in the XLU generated weekly bullish high close doji patterns. Seasonally speaking, XLU bottoms in March and continues up into mid-June, July. So they're still strong. This was, just as a review, this was in the first of the months that first weekly thoughts to tell you, hey, what sectors are strong during the month. And we went through a what I hope was thorough about the stocks in that particular sector that would do well. Apple, Juniper Networks, NVIDIA, Hewlett-Packard, which we made a little trade on. We dumped that. Facebook, which until earnings did okay. Google did pretty well. For the most part, the majority of these stocks all performed extremely well during this time and as a sector. So today, what do we got going on? We have a Dallas Fed survey at 10:30 in the morning, 2-year note auction, and if obviously that's code for 9 a.m. I can tell by the codes there. That's tomorrow, Tuesday. So look what you have. I think Richmond Fed Manufacturing Index will be important. State Street Consumer Confidence, but it's going to be important. I'll tell you right now, I think there has been a big boost in homes, existing home sales. I think you're going to be surprised to find homes might be getting bid up. There's a bunch of existing homes in multiple cities that are seeing upticks in home sales. So watch. Don't be surprised to see pending home sales increase, especially Florida, Chicago, believe it or not, New Jersey area. Any event, this week, probably what the whole world is going to be wanting to listen to is that announcement. It's a 2-day event. It starts Tuesday. Who cares? They're not going to say anything. But the announcement at 2 p.m., all eyes and ears in the world will be listening to what Janet Yellen and what that announcement's going to be if there's any word changes. And, you know, it just continues. There's a Fed speaker at 8:30. So I'm just preparing you for the week ahead. Earnings after the market close. If you don't know Apple's coming out, then you haven't opened up your email, because even I'm getting emails from, I think my mother emailed me telling me Apple's coming out with earnings today. But we have other big names. Mylan, Riverbed Technology, CHRW, Trucking Company in the Transportation, Avalon Bay Communities, Real Estate Investment Trust. If you take the time to look at some of these names before the market opens on Tuesday, I think besides Apple, and I understand the cap and the effect, and it's an index and it's all itself, but look at the rest of what these reports represent. UPS, transportation, Whirlpool, homes, people buying appliances, Merck, drug stock, Lexmark, JetBlue, are people traveling? Ford, GM didn't do well, but maybe Ford took the market share from them. Coach, I don't think people ran out and bought women's purses, but needless to say, Bristol-Myers, another drug company. Akamai Technology, Aflac, Insure, Buffalo Wild Wing, restaurant. A lot of restaurant names exploded off the charts. One was, I believe, DPZ, Domino's Pizza. I mean, that would have been a scary upside market. Casino operator, Wynn, U.S. Steel, Western Digital, Twitter, hello, Panera Bread, that's always been a mover. GoPro's coming out. This is just Tuesday. So if I've made you dizzy, we haven't even gotten into Wednesday yet with the FOMC. Garmin, GT, HOT, which is hotel, is Starwood Hotel. They might be, if they're doing well and have good positive guidance, which I think they might, it's an upper scale chain, that might be pretty important. I'm running out of breath here. MasterCard, Lumber Liquidators, they've got a little Chinese, the little problem there with the quality of their stuff, but neither to say. Mondelez, which we've done well in, and Norfolk Southern, as I already mentioned. This is NOC, Northrop Grumman, make planes, bombs, all kinds of stuff. Forgot who they were. Can't believe I did that. Anyway, Save, another airlines. Check this out. After the market closes, you got Baidu. We've got Yelp. Hello. We've got all the fun names here. Celgene, Biotech, CME Group. I mean, just when you thought, man, there can't be any more, then you come into Expedia, FLIR, Gilead, JDS Uniphase, LinkedIn, there's another one. I mean, and then just when you think, oh, let's take a rest here, CBOE, Clorox, CVX, Chevron, that is, energy stock. Wow, that's exhausting. So what does the market look like here? Well, number one, on the S&Ps, here we are racing to the upside. So we've got some upside market potential, obviously, number one. Number two, we've got strong gains, and everything in the AD lines is pointing up. I just wanted to point out to you, even the Russell, which is going to be an issue because in my sister publication, we took a small hedge in TZA against multiple long positions, and we had a nice less than 5% risk there. And we're probably going to get stopped out. We'll see. This Russell, by the way, was not really breaking out to new highs. The volume wasn't really performing, and seasonally you see a shift, a rotation out of growth stocks at this point in time into, believe it or not, technology. Can you see the down arrow there and the up point there? So we have not been getting just a sector rotational market, which has really been confusing for a lot of folks, but we've been getting an index rotational correction. People have gone from Dow Jones Industrial Average high dividend yielding stocks into growth stocks. They've come out of growth stocks and they went into tech names. And that's what the market's been doing, jumping from index-weighted stocks to index-weighted stocks. And I think our tools, we have been there for the majority of the time and following that systematic approach. So let me conclude with follow up the stocks that we have mentioned. I think the option rollover is pretty good and at least gives you an idea. And I also wanted to follow up with about the moving average. In the list of stocks in the S&P 500, stocks that are above their 50-day moving average are only 298. So even this shows their strength in majority of the markets, and it doesn't show that they're it's not significantly overbought. In even the 10-day moving average on the S&P 500, by the way, only 284 names. Earlier this year, we were in the 400s. Now, there is a threshold that I watch for when the S&Ps do get over that magic. It's a 400-plus number that I'm not going to reveal today, but it is over 400. I'll give you that. And as you notice, we're only 284. So there's a lot of stocks that are actually under the 10-day moving average, 217. So if you take a look at that, you'll find banks, you'll find apparel like Ralph Lauren. So there are some names out there, solid companies, Travelers and Insurer. There are some solid companies out there that might see if they gained ground. Can you imagine if money came into the market and forced these stocks up? Can you imagine where would the S&Ps be? Any event, I wish everyone well this week. We have mentoring here in our office, and I will be popping in from time to time. I wanted to go over the review of this week's report, the market condition, and also to alert you to what's coming out this week. Everyone, have a great trading day. That concludes our planning and scanning for the week. Thank you.